This is the Daily Market Rundown, some highlights from today's show. China strikes back, the VIX is now sitting at 40, and non-farm payrolls data is now in focus. Good day, traders, and welcome. Obviously a lot going on, so we're going to keep this short, sweet, to the point, make sure that whatever lessons come across, they resonate very clearly about what to expect today. The key takeaway is China has now retaliated. This came out across the wires around 45 minutes to an hour ago. Some of my charts might be a little bit dated, some of my indicators might be a little bit dated because of course everything has significantly changed over the last 45 minutes. So what to take away from it? Of course, we are seeing recession odds rising across the board. As of right now, the markets are thinking 5 to 6 rate cuts coming this year from the Fed. These rate cut pricing is coming thick and fast, and very much what the market is sending a signal of is an out and right recession. Okay, that is now the market's expectation. It's very much all about an incoming hard recession, hard landing, and that's the scenario into which we go into today's sort of context of today, as well as into next week. Now, the first thing to note is, of course,
USDC
China's retaliated with
China
a 34% tariff across the board for all US imports. However, keep in mind, Trump is about to wake up, and like we know, Lutnick said, do not retaliate. You retaliate, we hit back. So don't be surprised to see Trump come out and say, well, fine, you want to hit us, then we'll move yours up to 90%. And that's what this is going to be. It's going to be a game of chicken. Now, one thing I will say is, don't forget, there is a very good reason China's only hit back with 34% tariffs. Effectively, that's roughly speaking half the tariff rate imposed by the US. So ultimately, it looks as though they want to keep a little bit of room for negotiation. It's not a complete retaliation, but it's a very significant escalation. That's the key takeaway. We are now heading down a very, very dangerous route where, of course, egos are at play. The thinking was everyone would bow to what Trump wanted, but ultimately China struck back. Okay, now the key sort of things to pay attention to: odds of a recession are rising, market sentiment is at rock bottom, VIX is trading 40. In that scenario, all bets are off. Okay, in that scenario today, the probability of a limit down is very, very high across the indices. Do not fade it. Okay, it's not a day to be fading. It's not a day to be intelligent. Sentiment will not shift today unless for some reason China comes out and says, unless Trump comes out and says, look, I'm going to get on a phone call with Xi Jinping because we don't want to see an escalation in tariffs. Okay, so very, very important is just make sure that you're not sitting there entertaining the fade side of the market, despite the fact that, of course, markets have sold off quite a lot. Okay, now with that in mind, the key takeaways, you can see the flattener, you can see that risk off. This is very much dated because things have moved quite a lot lately, as well as we are massively down across the board. Just name an index, it's down. Topics down 10%. Regional banks are getting smacked quite aggressively in Japan, and we've seen that spilt over. The financial index is obviously getting hit very hard in the US as well. Why? Well, because when there's a recession, obviously demand for rates does change, and so we are seeing a lot of bank earnings come under significant pressure as the thinking is recession comes, which means we should get an earnings recession, of course, for the banks as well. So a lot going on. It's very much a scenario of a fluid situation, but complete risk off. Okay, now with that in mind, I think the key way to sort of approach these sorts of things is just to put things into context. Just a couple of minutes ago, we heard that the Nasdaq NQ is now 20% off record high, so we have dropped 20%. Now that matters, and I'll tell you why. From a context perspective, very important. If we look at what you've got on the screen, it's the the S&P 500, the futures continuation chart. And I just want to show you, if you go back to the last couple of corrections, 2018 when we had the Powell flip-flop, that was roughly a 19% correction before Fed's Powell came out and said, look, we're going to start doing some reverse repo action, and that obviously restored confidence and liquidity to the market. If you fast forward to COVID, it was a 31% correction before, of course, the Fed stepped in and cut interest rates very quickly to zero and blew a bazooka in terms of QE, and of course that stabilized the markets. We had again in 2022, we had a market correction of around 25% in the S&P, and then of course currently right now we're down around 15 percent in the S&P 500. Like I said, Nasdaq's down 20%. Okay. Now the reason I've done that is because we always need to know the degree of the correction. Because yes, sometimes markets do get ahead of themselves. They do price things a lot quicker and more aggressively. So very, very important. Just know the depth of those corrections. Now, in terms of levels, this is just a futile exercise. There's no such thing as really levels at this point. It's very much just about, where does the market overextend itself based on, of course, what is the reality on the ground. Okay, what we are hearing, and this is very important to stress, the thinking is the recession doesn't come today, it doesn't come tomorrow, it comes in the second half of this year. JP Morgan, of course, talking around a 60% recession likely to start at the end of this year. Okay, and I think Powell said this, and we'll get to his comments in a moment, but Powell said this in the last FOMC, which is that ultimately these tariffs take time to filter into the system, and that's why they're not immediately responding, because actually you won't see the implications of these tariffs anytime soon. Okay, however, the market is pricing it as if we're already in a recession, and that's why I want to stress, yes, this is a correction. Yes, it's aggressive. At some point, it'll overdo itself. At some point, it'll go a little bit too far in pricing this recession. At that point, you might see some dip buys into the market. If they do, okay, the correction will be quite deep. We know that. When you do get those corrective type price action, we do get some very aggressive opposite side flows. But today, all bets are off. Now, just a couple of other charts. We've seen the 2-year trade down to 350. It's now sitting around that 348, 350 mark. So we've had quite a significant move. We can see 50 basis points just this week in the 2-year, and you can see the rates markets there are really putting on those rate cuts very aggressively. So the thinking is, Fed, you're going to have to step in as soon as May, and that's important because we've got Powell out today, and what he says is going to matter a lot for the markets. Now we'll get to that next. First, let's talk about Jefferson. He came out, vice chair of the Fed. He came out yesterday, and what he ultimately told us is that obviously policy is restrictive. Okay, we know that to be true. He then told us that the current policy stance is very well positioned to deal with the risks and the uncertainties. Okay, now I thought that was interesting because what he was kind of doing was brushing off somewhat Trump's tariffs, not reacting or overreacting to it. But he obviously went on to say, well, look, negative sentiment often does not translate to a slowdown in actual activity. And I think that's very important because what he's telling us is that the Fed, or at least his belief, is that ultimately, fine, the market might be selling off, but so what? What's the implications for the economy? And there aren't any. Now, this is obviously post the tariff, so it was quite interesting that he said that he's almost brushing away this idea that the Fed's going to need to come in and save the day. Now, that matters because the markets right now desperately want the Fed to come and save the day. And, of course, if Powell does not come out today and give a bone to the markets, if he does not come out, opening the door to a May cut, perhaps even a 50 basis point cut, you're going to see the market extend on the sell-off. Okay, the markets are not going to take that favorably. They do desperately now want Chairman Powell to come out and give them something. Okay, and then, of course, he finally said no need to be in a hurry on policy rate adjustments. Okay, this is a day ago that he came out and said this, which very much points to a situation where his belief is that these tariffs are not something to overreact to. Now, very important as we go into Powell today, it's important to know his stance. I'm not going to go through this whole thing, but this was 3 weeks ago. It was effectively at the last FOMC meeting when he last spoke. And he told us it's too soon to say if it'll be appropriate to look through the effect of the tariffs. He also told us that his base case, and this is key, his base case is there's no policy signal from the tariffs. Okay, in other words, he would look through the inflation expectations. He didn't believe it would have a significant slowdown in growth. That was his base case. Now that, I expect, could change today. If he repeats this, it's quite hawkish. If he shifts that, it's going to be taken as dovish. Okay, if his base case is now that tariffs will prove problematic, perhaps increase the odds of a hard landing, etc., what he's in essence doing is opening the door to a May cut. Okay, and perhaps even as much as a 50 basis point cut. All right, remember. Go back to August last year. We had one NFP print at 4.2%, and the Fed shat themselves. Okay, they shut themselves into a 50 basis point cut immediately. The Fed is still restrictive. They believe themselves to be restrictive. They believe they've got a lot of room to cut. If Chairman Powell shuts himself today, 50 basis point cut is going to become consensus pretty quick. What does that mean? Dollar gets sold. Gold should find its way back up the page. Bonds are pretty much pricing in quite a bit of this. Of course, they will bid a little bit, but 50 basis points will restore a little bit of calm to the equities. Okay, it will give them that needed boost, that needed sort of, hey, we've got your back, in the same way it did last year. Okay, if you go look at that chart, I'm just going to briefly go back up. If you go look at last year, of course, we had that little bit of a correction there. You can see it there. He came out, they said 50 basis point cut, and bang, we're at record highs in no time. Okay, watch out for that. 50 basis point cut becoming a consensus will be a very good reason to be buying equity markets. Okay, keep a close eye on that. So yeah, keep a close eye on Powell. I think he's going to be very interesting to listen to. And like I said, you know what his base case is. Now, in terms of some of the other markets, inflation expectations are falling off a cliff in Europe, in the US, hence why the markets are now just pointing to an all-out recession. It's starting to look ugly very quickly. We can see Schatz also got smacked today. So why this matters is if you're thinking the dollar is going to be a one-way bet, perhaps not. Okay, this is more of a global recession than a one-way recession. So just keep an eye on it. Bitcoin's back to unchanged almost. So keep a close eye. Like I said, also Bitcoin. It's one of those things that, strange enough, it was bid up today, but it looks like it's back to unchanged. That's another one that I suspect over the weekend you want to be short of. We could stage a very aggressive drop in Bitcoin over the weekend. Okay, there is the VIX. Like I said, it's dated. It's now sitting around 40. It's getting ugly out there. Not an environment in which you want to fade. Only an environment in which you want to go with the flow, in essence, of the market. Okay, and then finally, let's get to non-farms. Look, I think the key message for non-farms today is it's stale. It's mostly irrelevant so long as it's not a bad number. What does that mean? It means if we get a good number, if we get a print sort of 160, 170, the equities will bid up on that, but I think you can sell straight into that. Why? Well, because guess what? This non-farms is from 4 weeks ago. The entire landscape, economic landscape, changed on Wednesday this week. Okay, so that's the key takeaway here, is that it doesn't really matter if it's a good number today, but it will definitely matter if it's a bad number. Why? Because if it's a bad number, it suggests that we've seen a significant shift in policy at a time when perhaps the economy was already slowing quite aggressively. In other words, if we get a bad number today, the odds of a recession go up another 10, 15, 20%. Okay, that's the key takeaway. It's a stale number in the sense of a good number, but it's definitely not a stale number in the sense of a bad number. Very, very important to stress that. So what is a bad number? Look, sub 100, the market's going to latch onto that. Sub 50, it's game, set, and match. Sub 50, what I would say is be very careful. Limit down. I think there is the potential for limit down in a number of markets today. There's just no liquidity. There's no interest to be long. So just keep an eye on it. Okay, but caveat, but Nasdaq's down 20%, and that's in the space of effectively just a couple of weeks. Okay, it was not that long ago we were trading record highs, call it 4 or 5 weeks ago. So just keep that in mind. We could go limit down, but like I said, typically what happens when markets go into these tailspins, we overreact to the downside. Someone comes and saves the day. Usually it's the central bank. Powell's got a chance today to restore stability. He does not want to see this sort of volatility. Don't be surprised to see him open the door to 50 basis points. That will be a positive for the market. And then more importantly, very closely listen to what Trump has to say. All right, that's it then for today. Stay safe out there. Okay, these are days where careers do end. Don't do anything stupid. Go with the flow. And yes, any questions, post them in the Discord channel. Good luck out there. Manage that risk and go make some money.